So hello and welcome everyone, and cheers for IPO. Right, 100% of Zomato, Clean Science, GR Infra, तो आपका तो लाइन लगा हुआ है IPO का. But it depends on allocation also. It's all right anyway. It's always enjoyable moments when your companies are opening. Good. And today what? Again, Tatva Chintan Pharma Chem Limited, the IPO launched at again a very good listing. So now what? We have got many queries about what we need to do for this company which are opening. Good. So here is the Tatva Chintan company. We are going to discuss about this company. The discussion will be useful to only those people who are looking for wealth creating module. We never discuss for some trading strategies on these companies, right? So you can stay for next 15 minutes if you are looking for wealth. Come on. So what was all about this Tatva Chintan? What was the offer? Friends, it was a small offer of around 500 crore where fresh issue has been provided by company for 225 crore. This fund would be going to company when they could use these funds for next expansion. OFS was around 275 crore. So this fund of OFS could be useful to their past promoters, right? So as usual, let us begin by assets. You can see here assets has been increasing from 188 crore to around 315 crore. So assets are growing. It's a small equity company. Paid up capital equity is only for 20 crore. Total equity is, as you can see, total equity, as you can see here, is just 166 crore because other equity is also 146 crore. So just make the total of paid up equity plus other equity. So here you can see assets of 300 crore around and equity of around 166 crore. So what we should see after assets and equity, we need to see on liabilities. So here you can see that long-term borrowings are 27 crore. So 27 crore is not a very large amount, but yes, still it is substantial for such a small company. So we should keep in mind that long-term liabilities are 27 crore, no lease liability. There are some short-term borrowing also, but here let us not see on short-term borrowing. We are only concerned for long-term borrowings, which are, we can see, of 27 crore. So if you calculate debt to equity for long-term borrowing, you can see it's 17%. It is, we can say, debt is there, but still it's low debt to equity. There is no high concern for debt here. So what about your total balance sheet? If you look, yes, it's a low debt to equity company. No problem here. Now let us move further toward income statement. As you can see here, their sales is 300 crore. So it is not a big market share. It's a very small company. But yes, they are able to grow their sales by 21% CAGR. Sales are growing with good and healthy profit margins of 17%. So 17% are good margin. If you see debt paying capacity, that is ICR, interest coverage ratio, is 16. That is not so much attractive, but yes, not bad also. We can say it's an average debt paying capacity company. EPS of 26 and you're offering at around 1100 suggest the price to earning is 42. Not so cheap, but yeah, company is growing. Sales are increasing every year. 26 earning is last year earning. This year you can add more, 15 to 25% more profits. So in this way, your PE would come little bit lower from what it appears right now, right? So overall, what can we say? Balance sheet. Debt is there, but still balance sheet seems to be good. Income statement, that was second important statement, right? Risk of a very small niche market is there, but currently in growth with good margins, with average debt paying capacity, right? This is what we can see in their balance sheet and income statement. So who hold this share? Just like several companies which we saw in the previous time, there were several VC holding in those companies. Here in this company, you can see it's the 100% promoter holding company. So these all people are among the promoter families. You can see Sekhar Somani from Surat, Chintan Shah, our Vadodara, and Ajay Patel, again from Surat. Right? So Surat Navsari, the South Gujarat. So these are the total promoter of this company. 100% shareholding is with them. So what is the object of the offer? As you saw previously, OFS was of about 275 crore. Fresh issue 225 crore. So what will happen? Funding capital for Dahej expansion plan 147 crore would be utilized. Now this 147 crore would not be utilized this year itself. It would be go in 3-year time span. R&D facility in Vadodara, 24 crore would be used there. So this budget is approximate budget from the 225 crore fresh issue which they are going to have. 275 crore of OFS would be directly to their promoters, right? So on what basis they have kept this price? Whenever you are talking about basis of the offer, you are looking for two things: qualitative analysis, quantitative analysis. So first, let us go for qualitative analysis. Qualitative analysis here, as we can see, they say leading manufacturer of structure directing agents, SDA, we can say, and phase transfer catalytes, that is PTC, with consistent quality. These two are their major products which contribute for their around 80% turnover. Second, global presence with a wide customer base across various industries having high entry barriers. And third, diversified specialized product portfolio required strong technical know-how. These were about qualitative. We are going to discuss more about this qualitative analysis later. Let us come directly to quantitative. आंकड़ों का मायाजाल क्या है? पैसा. So if we go for quantitative analysis in basis of offer, as we said, their EPS is 26. It will increase due to growth. So this year also we are going to see 15 to 20% growth. So this EPS is going to increase due to growth. On the same way, as equity will increase little bit, again, it will also affect the EPS, right? So don't stick to 26 EPS. It could increase due to growth this year and decrease due to equity, right? Second thing, return on net worth. Return on net worth is around 32%. Again, this will decrease little bit. Why? Due to increased equity. But 32% is a very good return on net worth. So yeah, we can say it's good. Third, NAV. So NAV is close to book value. We can say company is having around book value of 83 rupees. So if you go to price to book value of what price you are offered, you can say it's 13 times more than what its real book value is. But yeah, this is a specialty chemical industry. Sales are growing. Margins are good. So you should be prepared for this type of multiplications, right? So friends, let us now compare it with their peer group. If you compare the sales comparison with peer group companies, now see, be prepared that this specialty chemical industry is not a small industry. It's a very, very big industry with hundreds of listed companies. Aarti industry here you can see with the largest sales, 4,500 crore. You can see Navin Fluoro with 1,300 crore, alkyl amine, 1,300 crore, fine organic. We saw just fine organic IPO a few years back, and many of us have already applied. And you made a good money in fine organic. That was also a good company. But see, same like Tatva, it was a small comparing to its peer group. But as these companies belong to some niche market type of companies, we need to be cautious also, right? So fine organic with 1,000 crore, Vinati 1,000, and Tatva ultra small, just 300 crore turnover. So we can say Tatva is too small comparing it with peers. But majority of these companies have made money. So it's the boom of chemical. You are also going to make money in Tatva. Don't say Tatva is very good, that's why I'm making money. No. Chemical industry is good and majority of your companies are making you good money. Right? So what should be the second parameter? They do sales, but are they able to take margins to their home? Majority of the players you can see from chemical industry, as there is a boom, majority of them are making very good margin. You can see here top in the margins goes to this Vinati Organic, around 28% margin. See, it depends on the demand of their product and total competitor with same product. Right? Here you can see Vinati, alkyl amine, Navin Fluoro. These all are having 17% margin. Here Tatva also, Tatva at 17% margin. And the previous company which I said, Vinati, alkyl and Navin, these all are more than 20% margin. Right? So there are many companies with good margin in this sector. Tatva is also having good margin, no doubt about it. So on what thing the sales would get depend, right? How they are getting very good sales, why majority of the players from the industry are getting very good money, why all are rallying? Industry. So let us check the industry. Here you can see gross domestic product. As stated, this year the world growth was contracted due to COVID. Overall, world is also going to recover from this year, and we are going to see good recovery and rally in majority of the markets around the world. With some markets showing V-type recovery, some showing little bit muted type of recovery. Here is a very good data of COVID-19 fiscal stimulus packages in G20 countries as share of GDP. You can see Japan with 21% share of fiscal stimulus package. Right? See this, Japan, Canada, US, these are the countries among the top money making countries. Right? They are already having very good GDP. India also contributed in the fiscal stimulus of around 10% of the GDP. So that's not bad at all. So yes, strong growth path ahead for India. You know, India's growth story was largely positive based on the strength of domestic absorption. And the economy was registering a steady pace of economic growth pre-COVID. Though the pandemic has led to a short-term slowdown of the economy, not only in India but around the world, the medium to long-term fundamentals are sound, and India is expected to witness the revival of its economy. So this year itself we are going to boom the economy. There are several very good paths we can say about our country, like Atmanirbhar Bharat Abhiyan, preferred destination India for foreign investment, strong and diversified industrial and infrastructural base, fourth, burgeoning foreign exchange reserve, and fifth, demographic dividend. This all shows the strong path ahead. Friends, if you look on the global chemical market, as stated, 41% is from China. Then comes Europe, then comes US with 12% share, and India has around 5% share in global chemical market. So this is around $5,000 market And yeah, China is leading the way with maximum market share. During last 5 years, we saw the global growth of around 3%. And in coming 5 years, we are going to see growth of around 6.2% in variety of chemicals like commodity chemicals, specialty chemicals, and other chemicals. So please here note that Indian chemical industry generally showcase agri-chemical and fertilizer and pharmaceutical API outside of specialty chemical and petrochemical outside of commodity chemical. So here you can see that maybe commodity chemical or specialty chemical, we can expect the growth of around 5.3%. So if you are thinking what is commodity chemical, the commodity chemicals market include companies that manufacture basic chemicals in large volumes. These include plastics, synthetic fibers, film, certain paints and pigments, explosives and petrochemicals. So in the same way, if you are looking at what is about specialty chemical, the specialty chemical market is characterized by high value added, low volume chemical production. These chemicals are used in wide variety of products, including fine chemical, additives, advanced polymers, adhesives, sealants, and specialty paints, pigments, and coatings. So the specialty market is extremely fragmented. So as we can see here, world chemical sales, if we value around 5,000 US dollar billion, then China is the largest chemical producer in the world, contributing to 41% of global chemical sales. With 15%, the Euro, they are at second. And you can see all remaining countries. So if you segment it with market by industry and application type, if we say that yes, this industry have grown by 5.3%, we could expect, and we are expecting that in coming 5 years, if they are going to grow by 5%, in 2024, we may see that the major market would be covered by construction chemical with 132, home and personal care, pharma, API, and agrochemical and fertilizer. These are some major chemical among these industries. So it's a golden question. 5-year growth forecast split by key industries highlighting key factor driving growth. You can see home and personal care ingredient related specialty chemical would grow by around 5.7%. In the same way, agrochemical and fertilizer could grow by 5.8%, pharmaceutical chemical, that is API, by 6.1%, construction paint with around 5%. So almost majority of the sectors would be growing by around 5 to 6%. So that was about world, and what about India? You can see here, India have not grown by 5% because we are exporting and we are tapping other market. So despite the low growth of 5% worldwide, India grew by around 10% during last 5 years. In the same way, if world is going to grow by 5%, India's chemical market is going to grow by 12%. So that's amazing thing attracting towards chemical market. So this is India chemical overview. You can see here that commodity chemical or specialty chemical, both of these sectors are going to grow in double digit. As you can see the graph, this is the chemical export trend, India versus China. You can see India was around 13 US dollar billion market in 2015. The same time China was 56. In 2024, it is expected that China from 56 would grow to 103, while India from current 13 would grow to 37. So what it transforms that India would grow by 13% CAGR versus China by just 7%. So India would be growing very well than China. China's specialty chemical market has seen a downturn in recent years due to various factors. Most prominent among these are the recent environmental norms introduced by the Chinese government, which have led to shutdown of number of chemical plant. So who got benefit? India. So when China was at back foot, who came at front foot? You can see region-wise specialty chemical growth here. As you can see, India at front foot. Currently, Indian companies are experiencing wave of bigger order from global companies who previously used to purchase from Chinese counterpart. Many customers have been dependent on China for a long time and they are looking for an alternate China plus one. And India is their preferred choice. Many small and large companies are experiencing surge in demand from global companies who are shifting their source from China to India. And you can see India's growth versus all the other countries. So here is the very good and proper. So here is the very good competition analysis of some of the players. We say Tatva is able to increase their sales, right? We saw how Indian companies are growing their sales due to certain factors. See, look at any company. Here is Aarti Industry, who has grown from around 3,800 crore 2 years back to today 4,200 crore. PI Industry from 2,300 to 3,400 crore. Atul from 33 to 4,200. Navin from 1,000 to 1,000. They are at flat growth. Fine Organics. See, during the IPO, we purchased this company. It was around 900 crore. Today, company raised around 1,100 crore. Alkyl from 600 to 1,000, a very good jump. SRF, which has four different segment of business, right? Very good company. They are also they were doing around 5,700 crore. Today, doing 7,300 crore. All are making good profits. As sales grew, their profit grew more than sales. So you can check how Aarti grew from 300 to 500, PI from 300 to 500, Atul from 200 to 600, Navin grew their profit. Majority of the companies you would have seen here with 100% growth in profits. Right? Since all are having good margins. You can see during last 3 years, majority of the players' profit margin got increased. And they are having good margins. Right? If we want to have a deep dive in the industry, let me go to one step further. If you are doing competition analysis, specialty chemical companies have distinguished and differentiated business model. We can't keep everyone in one box. Why? Different companies, different products. Players like Fine Organics, catering to user industries like FMCG, HPC, and food ingredients, enjoy strong entry barriers, right? And a higher level of product customization. This creates a resilient business model with stable growth. Companies following green chemistry like vegetable, oil-based, oleochemical derivatives, Fine Organics are better placed than petrochemical-based player like Atul, PI, etc. But Atul, PI type companies have big market, right? So there they are having a very good sales. Here you can see companies with commodity nature of product like Vinati Organic or even Atul face tough competition compared to those with complex processing like Fine and PI industries. However, companies like AIL, which cater to diversified user industries, are better placed than those with concentration in one sector, like PI. PI is totally agro dependent industry who have suffered in the past due to weakness in global agro market. So everywhere there are some plus and minus point. You can't jump all with 5 to 6% weightage in your companies, right? You can invest in these companies coming in this sector, but 2-3% should be enough. You can see Aarti Industry have a diversified presence in various chemistries like benzene, chlorination, nitration, hydrogenation, toluene, etc., and continue to have a large growth opportunity due to this diversification product basket and capabilities. Fine Organic, on the other hand, concentrates its expertise on application-based oleochemical derivative, driving moderate growth opportunities, with the former hugely dependent on food and beverages and home and personal care industry. So everywhere there are some plus and minus. Which is best? The company with that brand, Pidilite, comes at number one in these cases. So what and where is Tatva Chintan? Their business. Friends, as we have already discussed, what is Tatva Chintan? Chemicals manufacturing company engaged in the manufacture of a diverse portfolio of structure directing agent, SDA. So majority of turnover comes from this phase also. Second, phase transfer catalyst, PTC, right? Good turnover of around 30% come from PTC also. Electrolyte salt for supercapacitor battery and pharmaceutical. Now they are talking of this electrolyte salt, and I've seen many people that saying that this company is in this green sector like battery, you should focus here. But the turnover is only 1%. Just 1% come from electrolyte. So don't talk about electrolyte today for this company, right? Their agrochemical intermediates and other specialty chemical is also a small part. So company is the largest and only commercial manufacturer of SDA and for zeolites in India. It also enjoys the second largest position globally. But still remember, they may be India's number one, they may be Asia's number one. Turnover कितना करते हैं? 300 crore. So they would be number one in their sector, but that sector's niche market would be a smaller, right? So these are the proper segmental analysis for Tatva Chintan. As we discussed, structure directing agent SDA is responsible for 40% turnover. So yes, we can say this is their big sector. PTC, phase transfer catalyst, is responsible for 27% sale. And pharmaceutical and agrochemical intermediates and other chemical responsible for 30%. So where is that electrolyte battery sector? Just 1% contribution. No need to talk right now about that. First you do some major contribution from that sector, right? Yes, they were incorporated in 1996, having two plants in Gujarat, one in Ankleshwar and second in Dahej. Their R&D facilities in our city, Vadodara. Chintan Shah, Ajay Patel and Shekhar Somani are their promoters. So their customers include Merck, Bayer, Asian Paint, Ipox Chemical, and a big line of several good and big companies. So this is their milestone of the company. That company's incorporation was in 1996, right? Their 2015 was the year of 1 billion turnover. 100 crore का पार किया 2015, 50 crore का पार किया 2013, 200 crore, 200 crore it just passed in 2020, and today doing 300 crore turnover. Wonderful. So one more milestone will be added here. What? Yes, they will be saying that in 2021 we came with a wonderful IPO, right? And on the day one we got around 5,000 crore market cap. Just think about it. The turnover is 300 crore and the market cap which market has given is 5,000 crore. That is 20x more than their sales. This is what happening right now in India. And see, there is a reason after this. We have not seen a good rally in GDP. I am really talking about business. We were muted since 2017. World was muted since 2017. So now what world is expecting? Now what India is expecting? We may see a very good rally in GDP and market cap would be mirroring to GDP. So get ready for these things. So let us do summary of today's class. Industry, yeah, it's a growing industry with some well creator companies like Pidilite, PI and Atul. Best Pidilite. Tatva Chintan, as companies growing, can hold it for the long term, as we have hold fine organic also, right? We have hold a solar industry also, right? So these all are some good companies, Atul company, but see, we need to do some profit booking also. If you are holding Pidilite, I will say no need to book profit. They are the brand and these products are going to sell for 100 years also. Here, we need to book some profits at different stages, right? New buying suggested for wealth creator companies. No need to go for new buying here, right friends? We can book profits at different stages, correct? So thank you very much for participating. If you have not subscribed, subscribe to this channel, subscribe and click their bell icon. And I will like your comment where you are going to invest from chemical industry sector. Pidilite, Atul, Alkali, Vinati, kitna line laga hua hai. Or this Tatva, right? Thank you so much. And Jai Hind to everyone from Piyush Patel, Profit From It. धन्यवाद.